tired of sitting on the sidelines while others are making millions in the world of cryptocurrency? Well, wake up. It's time to stop gambling your life away at the crypto casino and make some massive, professional, skill-based gains. Welcome to the Cryptocurrency Investing Campus, where I, Professor Adam, transform you into an actual investing professional by equipping you with the most cutting-edge and advanced skills exclusive to the real world only. Trend probability modeling. Stay one step ahead of the game as we stack the odds high in our favor. Learn how to spot trends before they explode in both the up and down directions. Strategic Omega Modern Portfolio Theory. Modern Portfolio Theory is the bank's best kept secret for portfolio management. I've brought it into our world and made it 100 times better. This is one of the greatest portfolio management techniques ever created. Last but not least, full cycle valuation. Learn the art of valuing the entire crypto market from start to finish. Develop an eye for understanding where we are and cash in on rare value opportunities. Hear from my successful students who've transformed their lives using these very skills. They're no different to you, but they've changed their lives with my methods. The market is becoming more competitive by the day. Act now and build world-class investing systems in the most practical university on earth. So if you're ready to take control of your wealth by embracing the modern, the cutting edge, the world's class, then join the Crypto Investing Campus today. The future of your portfolio is in your hands. GM, good morning everybody. Welcome to another episode of Investing Analysis with your man, Professor Adam. We have a lot of stuff to get through today, including another liquidity report from Cross Border Capital. So without further ado, let's just get straight into it, shall we? So first things first, as normal, we start off with the TPI. There's been a very, very marginal uptick in the medium-term TPI, but it's nothing major. Now I've posted the BTC ETH BTC TPI here. I forgot to update it yesterday. This is actually yesterday's reading. Yet again, another example of me being a fallible individual and forgetting to update stuff. So you should always have your own, which is the whole point of you being here in the first place. It's not to fucking be spoon-fed by me. It's so that you can actually develop this shit and be an independent person so you can make the appropriate decisions for you and your needs. Right? Because I don't know who the fuck you are, right? I don't care. Well, I do care about you. I want everybody to be successful, but on your own criteria and your own needs. I cannot possibly know everybody's fucking needs in this university. You all come to me with your own personal problems, and it doesn't matter how many times you tell me of all the different nuances in your life, there'll still be an infinite number of nuances that will make you unique that I can't possibly figure out for you. The only solution is to know this shit for yourself. We're already off to a bad start. I'm already pissed off. All right, we'll get into the most interesting stuff first, which is this update from Cross Border Capital. So we have a global liquidity weekly update. Global liquidity has hit a record $170 trillion. This compares to the 2023 average of 166 and the cycle low of 158. Cool. So the typical liquidity cycle lasts for 5 to 6 years from trough to trough, and we are some 15 months into the current uptrend. On this basis, we expect liquidity levels to rise through this year before peaking in late 2025. So this, as you can see, is I believe this is a nominal chart. So any increase in the nominal chart is wonderful, and you can see very clearly there has been another significant incremental increase in global liquidity. I don't know about you, but that makes me very, very happy. Now, despite that, I'm still slightly biased towards a bit of a longer consolidation. If we look at some on-chain metrics, you'll see that there's still quite a lot of profit circulating in the cryptocurrency ecosystem. But I will leave that for just a little bit later when we get through some more data. Now, the chart below plots our weekly measure of global liquidity growth derived from central bank balance sheet data. Global liquidity growth has accelerated to near 15% 3-month annualized clip. A virtuous cycle of rising central bank liquidity and rising collateral values is underpinning the recovery. So this would probably be a decrease in the fucking MOVE index. Let's see how it is going. Yep. So we have incremental decreasing there. If you really, really want to see global liquidity start to go hard, you want to see that begin to decline through there. That would be very, very nice. Now, this is the rate of change chart. As you can see, the rate of change chart represents the nominal chart. We have a kink here from the last metric, which is slight a slight pause there almost to another higher measurement. So we are going very, very fast. And for the people that have been around for a while, I'm not going to go into detail of this because it was a bit of a study, but all of these previous locations where the spread between the 12-month and the 3-month rate of change, all of these previous locations marked significant, well, on average, they marked significant locations where there was a price appreciation afterwards. Very, very strong forward performance from spread levels this wide. Now, from areas where the spread wasn't as wide, so over here and over here and over here, that was not as high quality. But the ones where the widespread, like the environment that we're currently in, that was very high quality. So collateral values have recovered in bond market volatility is eased. Excellent, cool. So that's basically what I just said. Yep, the chart below shows world shadow monetary base. It's been bolstered by the US Federal Reserve and the People's Bank of China. The recovery has been bumpy. Recently, this has been due to the PBOC, which has been alternatively increasing and decreasing liquidity provisions in the last few weeks. This often happens at this time of year, giving way to a more sustained boost closer to the Lunar New Year. The Lunar New Year falls on the 10th of February. And we have nominal levels of liquidity. Now, this chart up here, from what I understand, this one here, what we're seeing in this chart going back to June 2021 is basically just this part of the chart, like so. That's what we were looking at further up. So this will also be significantly correlated to cryptocurrency values, the rate of change as well, but I'm not going to perform that study now. Investor exposure is creeping up along with liquidity, which would be expected. So as you can basically see, this is the most important data point that we have regarding cryptocurrency. Now, we want to see this nominal number go up. Now, make sure you're fully understanding the difference between nominal fucking numbers and rate of change numbers. I'm seeing some confusion. There's people asking me, oh, Adam, I don't know how to read these fucking charts. It literally tells you here, 3-month rate of change, 12-month rate of change. And those are obviously, they're in percent because they can't be in any other number. And a nominal chart is in dollars. So some may find one type of chart easier to read than the others. Personally, I would imagine that most of you would find fucking dollars easier to understand because it's literally just a number showing you how much money is being printed. But for people like me, the rate of change often is the easier chart to follow because I can see how it is behaving over time. The first derivatives of your nominal measurements generally give you more information than the nominal number itself. So when you start to see this decline, or you see a change in the relationship between the 12-month and the 3-month, that can give you indications of things going on, which is the reason why at the beginning of this discussion, I said the spread between 3 and 12 sometimes contains that bit of information that you really want, which is where, when you have a 3-month spike in the rate of change of liquidity, do you have the strongest increases in cryptocurrency values? Well, it's when the spread is at its widest, because that, I would imagine, would represent the initial injections into the global economy that you would see coming out of periods of low valuation, which is where you're going to get the majority of your price performance from. And when the rate of change is very high, in both metrics, you're probably at a stage, at least when you can refer back to its historical behavior, you can see this one doesn't actually have a year. Yes, the year axis is in the middle. So you can see that previously, when the 12-month rate of change goes up to about 15 or 20%, somewhere within this range here, that's kind of the cycle peak. And when the 3-month dips below the 12-month, then you start to see that declining into a cyclical decline like so. But anyway, the point is that liquidity is going up, and we are in a liquidity upcycle. And when it comes terms to where we are with the market, to kind of contextualize it at a very high level. Probably remove that. This increase that we've had in total, which would represent, or Bitcoin, it doesn't matter. It doesn't matter which one you choose. Bitcoin as well. I am biased to say that, where is it? December, wait. Bear with me for a second. January 2023. Yeah. So this pump here, I would believe, would be the pump that would get us out of this into the Lunar New Year, and then of course we have more pumps from then on out. Anyway, move on. You know what it is. Now, I've rearranged all of the daily analysis data in a bit of a different format. I'm probably going to make some more changes to this, but basically what I'm doing is I'm going from longest term to shortest term, and I'm going to try and arrange the data that way. I usually start with the liquidation maps, but they're actually more of a tactical measure, so I'm going to leave them towards the end so that the structure of how we're going through the data is more consistent with how my brain works, which is very much a case of we go from the highest level and then we work our way down through the different levels. And really, that is the way that I approach trading as well. That you might be curious to know. If I ever do a type of trade, it's generally when everything aligns all the way down the hierarchy of different analysis methods. So you look at the very, very highest level analysis, which is like liquidity, and where we're going with monetary policy, because that is the main driver of Bitcoin. And then you go down to the next highest level, and the level below that, and the level below that, and you keep drilling down, you keep zooming in until you get to a point where either you can confirm an idea or you can disconfirm it using the data that you have, and there's confusion there. If there is confusion or conflict of information on a lower time frame, then you just go back up to the next highest level and then you leave it there, because you don't want to go too deep and start to get down into the weeds and miss one of the levels on your way down, because otherwise you're not going to have coherence between all of your different analysis. So every time that I approach the market, my methods always go from the very highest level and then work our way down through the different levels. And I'm going to try and represent that more clearly during daily analysis. So we're going to look at our aggregate valuation, essentially, which is very, very basic. Very basic. We can look at these range adjusted charts and be like, oh, well, how far away from the cycle peak are we? And of course, we have a lot of different other metrics that can look at this, but the CBBI is a very rough, very fast, and super rough way of just kind of getting an idea of maybe if we should be paying attention to it closely or not. Now, the true market mean, or the AVIV ratio, which is developed from the Coin Time research paper that was released by Checkmate, and that this is an interesting metric that I think is also very useful. I don't know if I would agree with the way that they've set up the standard deviation lines. I think they're a little bit too conservative, but they may also be useful for figuring out where to reduce leveraged exposures. So that could potentially be useful for us. But yeah, you can see here that as far as the valuation is concerned, we are nowhere near plus 1.75 standard deviations or plus 2 standard deviations. So we still have quite a way to go through the cycle. Now, as we will go through the crypto quant dashboard so that I can look at all my favorite metrics. What I might do here is I also might rearrange all of the different metrics within here to go from longer term to shorter term stuff. But for today, we'll just go through them one at a time as I normally do. No major changes here. Good to see that one coming up. However, it wouldn't surprise me to see, again, like I've mentioned, this kind of consolidate a little bit in coherence with the inter-exchange flow pulse metric, because that is one that I'm looking at and thinking to myself, well, it very much looks like it's going to consolidate. Now, I don't think we're going to get significantly lower prices. That was what I was looking at with the short-term realized price metric here. That was my main thing. I think we've bottomed. I don't think we're going any lower than... I don't think we're going any lower than here, which is like the 38, 39 level. I think that's fucking done. However, maybe my projection on where the consolidation happens needs to be loosened up a little bit, because previously I said that I was expecting the consolidation to happen within this triangle here. However, you've seen that we've had some price performance from Bitcoin, so perhaps it moves through this period like so. Or maybe we have vertical accumulation like so before it goes absolutely parabolic. Because, and we can cover this as well, which is effectively the GBTC outflows are beginning to slow down significantly, apparently, which is great news. And that will actually provide less downward pressure on the market, which is fantastic. So I can't see anything interesting from the composite index, and there's no volatility signals. This long-term net unrealized profit and loss metric is not really useful to us. The risk index is at no real extreme values, and I don't entirely trust it either. Inter-exchange flow pulse, that's one that I am curious about, that I want to keep an eye on. It is declining rapidly, with absolutely no sign of strength there at all, which feeds my bias for consolidation. We haven't had a time with this metric's history where it's been highly inaccurate at all. It's been quite accurate its entire history. Even this very short-term signal there, which could be considered similar to the environment that we're in right now, because we most certainly are in a Bitcoin bull market and an uptrend. But how long this consolidation is going to last, and how fast this fucking metric can recover back to its moving average, it's to be seen. This behavior would suggest a consolidation that would last in the weeks, but the liquidity data, on the other hand, is suggesting what would be almost an immediate recovery. So the contrast between these two metrics is something that is a great cause of concern and curiosity for me. I wouldn't say major concern. You know for a fact that the liquidity is the main driver, and provided it's going up, it's going to be supportive of this market. It's going to cause prices to go up. I'm definitely not saying that we're in some sort of a bear market here. If I had to put a call on the line, I would say that this metric is incorrect on balance between liquidity and the inter-exchange flow pulse. But it's just that its historical behavior seems to be fairly accurate. Nothing there with CDD, cumulative days destroyed. Realized cap, nowhere near. Crystal bands, no. Okay, holdings. Holdings and the GBTC trends. So let's zoom in super close on this if we can, without my PC fucking melting. Wow, this please excuse me, it's running. I need to get myself a new fucking laptop. This laptop is dying every time I open this page. Right. Holy shit. Okay. So GBTC holdings are basically stable at this point. I'm seeing the last 2 days was at that same level. I wish this fucking price label would fuck off. But you can see that the remaining ETFs, excluding GBTC, are continuing to accumulate rapidly, which is fantastic to see. So you would expect to see the aggregated historical Bitcoin holdings trend if this fucking page would ever load. Fuck this, I'm gonna refresh the page. You would expect to see that metric increase in value. Which you can kind of, just a little tiny bit. Just a little bit. You can see that line increasing in value, but it's very mild. Yeah, that will become more conspicuous over time, I imagine. Now, yes, so MVRV, the short-term holders, still kind of hovering at a decent level. I kind of would expect that to converge a little bit with some more consolidation before taking back off again. That would be great to see, and that's something that I would love to see. Just the MVRV investor cap are not useful. Short-term holder SOPR, I've said previously that would be cool to use as a medium-term TPI trend signal, of which it is above 0, which is good, positive. I haven't incorporated that personally yet, but it's something that I'm interested in, that I will look at if I ever have any spare time. Now, new money. New money, I believe, is almost completely reset. You can see that it's literally at 0.03 compared to the extreme values that we would prefer to see if we were trying to extract a signal from this, which is probably around the 10 mark in either direction. So we're basically fully reset on the new money metric, which means new money holders are currently at a break even. Probably means they're going to start adding more positions, which would mean that maybe we're going to see more liquidations, which would fulfill my suspicion about fucking reversions and consolidation. So that's all the metrics there. I wouldn't say there's too much to talk about. Still, it's really the inter-exchange flow pulse that I'm most concerned about. Now, we have a new and interesting metric here. Pretty sure that Charles is the real world student and he must follow all my work, because it seems like every time I have a fucking idea, somehow it seems to find its way into Capriel's website. So what we have here is breadth. Now this isn't like the Macallian summation index, which would have been nice, but this is a simple measure of breadth. So he's got what is it? Percentage of Binance coins above the 50 or 200-day moving average on the charts website. When I show you that, it's they do have that with the 50 and the 200 down there. It helps identify strengthening trends and also helps identify when things are relatively overbought or underbought. Now, for some unknown reason, they haven't included the underlying Bitcoin price chart or total or others or anything here in this breadth measurement. They've just included breadth of 200 and breadth 50, which is fine, but it's like it would be way easier to contextualize it if you had the price in the background. So that's the reason why I have this one here. So what you have is you have Bitcoin price in the gray in the background, and you have the headline measurement, which is breadth 50 on the front end. So you can see that for a lot of the time, these breadth measurements will coincide with local tops. Now, this one here is, I think, it just caught my eye right now. You can see that it's not entirely precisely accurate to the BTC top, but that makes sense to me because I remember this second peak here as actually being the peak of Ethereum. Like most cycles, Ethereum tends to peak after Bitcoin, which is also I'm taking a lot of tangents here, which is also part of probably the reason why a lot of you are like, oh, Adam, are you sure about Ethereum in the long-term holdings? Listen, for my portfolio, I understand that Ethereum is going to underperform for the majority of the cycle right out until the end, and then it's going to outperform like crazy, like it did in the previous cycle and the cycle before that, because that's its destiny, to underperform Bitcoin and then have all of that capital rotating from one ecosystem to another. I'm not going to get into the weeds of like the fucking benefits of Ethereum. I've covered that a million times already. Yes, I'm not stupid. I understand that Solana is a better fucking retail chain, that Bitcoin is a better store of value. Whatever. But anyway, that is just shows you that sometimes the breadth doesn't always indicate where the Bitcoin market cycle peak is. This isn't what I would say is a metric to decide where Bitcoin's cycle peak is. This is very much a metric that tells you where the risk sentiment is as far as the overall market is concerned. If you were to have this chart in the background as not being Bitcoin and being total instead, let's have a look at that. Actually, why not? What we'll do is we'll take BTC and place it over total, and you can see that total. Oh, well, wouldn't you know it? Isn't that surprising? It's almost like I know what I'm talking about. You can see that the Bitcoin peak happens before the total peak. So total is a better measurement of the coherence between this breadth and price than fucking Bitcoin is. Because you can see that it peaks later than Bitcoin price. It peaks afterwards, which is what Total does. Whether or not you can get access to Total as a price series with, or Capriol or whatever they're doing, I don't know. But anyway, now you also this also kind of makes sense to me. I remember decentralized finance and NFTs and everything going crazy into these final phases of the market, and that last gasp for air before it went into the bear market was absolutely hilarious. Now, basically, how I would use this. I would use this measurement personally myself, and I would look at this quite frequently because I've been looking forwards to seeing a measurement like this for quite a while within the cryptocurrency space. So anytime that you have your breadth measurement down low, I would be looking to accumulate more high beta shit. And when the breadth is high, you may want to consider rotating out of high beta shit. But it's tricky because we only really have one major cycle to go off here, and you can see that we have sustained high values of breadth during recoveries, especially through here. And you only really get a measurement of the market peak at a very late point. So I'm still not entirely certain how I would use this, but it would be a good risk measurement, a good risk sentiment measurement. So I'm going to be continuously referring back to this one through this website here and observing it forwards through time and trying to develop a bit of a understanding with it. And this is a good representation also of my mindset and my research process. You notice that even though I understand how the indicator works, I'm intending on developing a very deep relationship with this thing. I can't just look at it and immediately know exactly how it's going to behave. I do have a pretty good idea of how it's going to behave, but my intention is to really work with it over time and develop a mastery of this type of indicator because I know that it's going to be useful. The same goes for anything, whether it's a skill development, whether it's an individual set of data. You can continually get more and more insights the longer you spend analyzing and tracking these things, making notes of them. You know, I've never been the type of guy to keep a trading journal or anything like that. Who knows? Maybe I'd be much better if I did. But that's not something that I personally do. I just always constantly refer back to things. That's one of the reasons why I tell you guys that repetition is so important. Repetition is the key to all of skill development. Forever. For everything that you could ever do, it's repetition. Because it takes time for the brain to form these connections. It's never an instant thing. A lot of you fuckers are out there thinking that this crypto course is like a fucking, I don't know, like it's like the Matrix where you get the plug into your head and you can just download the information. When was the last time you ever competed in a sport and immediately became the best in the world by doing it once? You, like, or anybody ever? No, it's not fucking possible, is it? So dedication, constant study, and a deep understanding of this stuff through repetition is the only path. So let's have a look at the Capriol website and let's go through the charts and see if there's anything interesting here, any updates worth looking at. The Bitcoin macro index is still in decline, which is good. Whatever, let it consolidate. I don't give a fuck. Actually, that if anything would validate my my hypothesis of consolidation. So that's actually kind of cool to see. Futures still chilling. My theory of how that would look like. So that still has room to consolidate for maybe another several days or maybe a week or two and validate my consolidation thesis. Ethereum's macro index still above 0, which is good. Whatever. Ether is nice and low. I don't really look at either of these. I don't believe this liquidity measure is entirely accurate. I mean, it's good. It's better than nothing, but it's not what I'm not really like hung up on it or anything. Yeah. Market breadth. Yeah. Cool. Altcoins. And now we're back into the altcoins. Yeah, so we've already covered that, and we're kind of coming off the lows now. So I don't know if you guys have been tracking shitcoins and like projects on like sub projects on different chains and things. A lot of their underperformance has been like quite stark in the last several days. So this breadth measurement here, where it's kind of come off and it's starting to consolidate around like the 20% mark, that seems to make sense for me, just from kind of like a qualitative point where I've like just generally judged what the market looks like. So if you're feeling a little bit like down in the dumps about your altcoin holdings or about some of your alternative investments outside of the majors, I wouldn't be stressing out. I think that's quite normal. And the fact that we are in a phase right now where breadth is low and we are in a liquidity uptrend, I believe, especially if we're going to get more injections in a couple of weeks, now's the time to think whether or not you've got the correct allocations. Don't go out there and be like super horny for getting like a huge multi bag of like all types of shit and have like 20 different projects in it. You don't need to do that. Yeah, I understand that my SDCA holdings is quite stacked. But yeah, there's personal reasons for that which I can't share. But yeah, I think it's good. Like just chill out. Like basically, that's what I'm trying to say. Just relax. This is going to be about as worse as it's going to be between like now and the next couple of weeks. It's going to be as bad as it's going to get, and then after that, it's going to be fucking awesome. So just be prepared. Calm yourself down and be prepared for the euphoria that you're going to feel, and don't become overly excited either when they start to go up. All right, now we'll move on. Move on to a couple of metrics from Kane Island. So this is Timothy Peterson's website. So I'm just going to blast through a couple of these different metrics. I don't think any of them are really relevant, but I just think it's kind of cool to look at their behavior. And you can see that he's got lowest price forwards. He's got ACE, Metcalfe, and a macro model of sorts. Now, I don't think any of these are really useful for bottom ticking. A lot of them are maybe good for accumulation zones. You can see along the bottom, that would be great for your accumulation zones. Lowest price forwards is great for that. ACE is good for that. Metcalfe is pretty chaotic, so I'd say that is not very good. It does have some signaling capacity when it comes to market peaks, but it's not super good. It's kind of just more of a long-term trend model, but the macro model is good. It kind of shows you where the divergence from the macro model and peaks are. I think that that's quite interesting. It's worthwhile watching, because even though the turning point of the macro model is late relative to the peaks, it's when the speculative mania gets ahead of the macro value, it marks actually the cycle peak, which makes perfect logical sense to me, as most of Timothy Peterson's work does. Timothy Peterson's work is interesting because, to me, a lot of his work makes a lot of sense. Like, I'd say 90% of it is like, oh yeah, this guy is smart and I can see exactly what he's doing. But there's a remaining 10% where I'm like, why the fuck did he do that? And I love that shit, because I know that he's the man, right? I know that he knows his shit in the same way that Darius Dale does, in the same way like Julian Brigden does, in the same way that fucking Michael Howell does. I can identify a guy that knows his shit. And then I say to myself, okay, well, if I can see where he's coming from, but there's stuff that he's talking about that I don't know, then I know that he's a fucking, he's an innovator. And there's some insights in there that I can potentially use. So whether or not we use those as Bitcoin cycle peak models, perhaps, I wouldn't mind. And this one here as well is an interesting one, which is a drawdown metric. And when you're not in a long-term drawdown, it's generally a market peak, which I thought is an interesting way of measuring the performance of Bitcoin and kind of detecting peaks. Whoops. Okay. Now we'll move on to some of the shorter term stuff. So Decent Trader map, nothing crazy there. Google Trends is looking abysmal. I actually looked on the Google Trends website yesterday and still looking like absolute garbage. People are not very interested in cryptocurrency right now. We have a lot of sentiment on ETH and not much on Bitcoin. That may drag the ratio lower, which is not good. You can already see there's a tiny little bit of underperformance from Ethereum today, which probably represents that. Nothing really useful there. Let's have a look at the liquidation maps, shall we? Ah, yeah. Typical. Yeah, so everything's looking pretty biased to the downside. Bizarre. Maybe Solana outperforms for a day? That would be cool. What about the 30-day on CoinGlass? Yeah, nothing too stark there for me to see. Ah, yes, another full cycle valuation indicator here. Shout out to the student that supplied this one to me yesterday and was curious about it. They were asking, is it possible that they could, whoever developed this, force fit this metric here? And I don't know, I suppose, but it's a nice metric. I like this. This actually makes sense. If you were to take these points and pass a regression through the points to kind of figure out where the line of best fit is to judge market cycle peaks as a result of that accumulation of the what is that metric anyway? Long-term holder supply. I think that's cool. I think that's an innovative way of looking at the data and a very smart way of using the regression. I think that's fantastic. So yeah, this metric here I think is great. Is it force fit? Who the fuck knows? There's only a couple of data points here, so it's one of these things where it's you can use it. Does it really mean anything though? You wouldn't rely on it solely, was what I'm trying to say. You wouldn't just look at this one thing and be like, oh yeah, this is the only metric that I'm going to use to measure Bitcoin cycle market peaks. You know what? I haven't looked at anything else on this website, so maybe Bitcoin peak distribution top. Experimental. Oscillator. I see. Based on what? Sophisticated algorithms, he says. Yeah, cool. Bitcoin search trends and address activity. Total active addresses. Where's the Google Trends? Is it in blue? Total new. On-chain VWAP, supply and last active 30 days. On-chain fib. On-chain fib bands. This will be good. Fuck this. All right, anyway. No change there. We already looked at this, which is the Capriol one is looking quite good, and the breadth in the stock market, both the small cap and the major cap breadth, is increasing, which is a risk on sentiment, which is fantastic. Probably is part of what contributed to this increase here, which is an increase globally in risk appetite. Remember, now that also this is probably worth mentioning. Now that the Bitcoin ETFs are a thing, there's probably going to be an increase in the correlation between the stock market and Bitcoin over the long run. Whether or not you can use this tactically over shorter term periods, I'm not going to speculate on that. I would say perhaps, because you're going to have a change in the risk sentiment of everybody using the stock market, and because Bitcoin is like right adjacent to it, and they can see that the long-term correlation is already quite high. And when people are feeling more risky and more risk averse, price kind of reflects that. I think they would be thinking about Bitcoin as that extra speculative bet. I think that there will be an increase in correlation over time. Who knows? Maybe even it will be integrated into the stock market somehow. I don't fucking know. All that I know is that it's driven by liquidity. Now, we've covered everything here that I think is relevant as far as data is concerned. As per my bias for what I've been saying this whole video, if liquidity is going up, but we have, inter-exchange flow pulse and high levels of profit in the market looking quite peaky, you would expect reasonably for this to distribute for a period of time. We need time-based capitulation so that profit can distribute and we can recycle that into different hands, or for that money to kind of flow out sideways into other projects, and then that can begin to increase again. So I'm still bullish as ever, and I don't see that there's any reason to be bearish at all in any regard. I'm very happy. So now we don't have any new things from 42 Macro, so I'll jump into the general chat now and we'll answer some questions. So please give me your questions and I will try and keep my calm the best I possibly can. GM, thank you for coming, Kara. Good to see you. All right. Will the STCA sell before the halving or will it hold through? What the fuck? What the fuck type of question is that? Fuck off. See, we're already off to a bad start. Man, that is disappointing. You are fucking disappointing me, mate. Wow. I'm so excited. I know it's lame because it's university, but I'm currently in quantitative reasoning class. Can't wait to see what I learn in comparison to your masterclass. Yeah, you may find that you can learn some things that you can apply to the masterclass and to your investing methods as well, which is exciting. Yeah, I made the fucking exam. I specifically made it harder than university exams because I did all my university exams and I was fucking disgraced by how easy they were. Now, I don't know if that sounds psychotic or not. I don't care. Because every exam I sat, I was like, are these people fucking serious? They didn't really test for any of the stuff that we learned. It was some very, very basic stuff. And even within that respect, the masterclass exam doesn't test for everything within the masterclass. So you guys get it easy. You get it very easy. Everybody's always struggling to pass the masterclass exam, but you don't even realize how fucking easy it is compared to the knowledge that you actually should have. I can never fully test for all of the stuff that you should have learnt during the masterclass. If you pass the masterclass exam and you're like, yes, I'm so glad that I passed the masterclass because now I know what's in those lessons. You don't know shit. You could probably go back and rewatch the entire masterclass from the beginning again and still learn things that you'd never seen before, even after passing the exam, even after redoing all the lessons 6, 7 times. There's just too much material for you to possibly be like, oh yeah, I know everything. GM, hi Prof, hope you're doing well. I'm trying to use the liquidity funding. If I use the methodology that you use in the guide, it gives me a drawdown of 400 to reach the second 400% to reach the second standard deviation, but that's not good. So what method? I don't know what you mean by 400%. A drawdown of 400% is not possible. So I don't know what you mean. That's you can only have a drawdown of 100%. Are you talking about something different? Are you talking about a collateral ratio? Are you talking about the collateral ratio of 400%? You need to make sure that you do the second video so you understand what the collateral ratio needs to be, so that you can avoid redemptions. Because these days, the liquidation is not your concern. The redemptions are your main concern. Did you reply to the crypto CEO? Yes, I told him to join the real world with the rest of the plebs. GM Professor Adam, why do you have a fundamental bias towards Ethereum? Is due to, I covered this yesterday. And the day before that and every other day. I don't really bought a sports car before. Yeah, fuck yeah, dude. Ah, shit. Bro, you caught me in 4K, man. Fuck, I feel attacked, man. Honestly, I've recently spent like $14,000 on mods for the car, and I probably should have spent that money on a new laptop first. Yeah, no, I haven't given him. I haven't given him access to anything. I literally told him just to join the real world, just like everybody else. Adam's friend is the Capriol. Money is a tool. Yeah. Hey, so I did withdraw a small amount of USD from MXC. Somebody else can help him. Starting to realize no matter what the vehicle investments you have to be prepared for a loss. All these old people who have their 401ks. Yeah. No, you have to learn investing. There is no alternative. If you want to participate in the fucking society that you exist in, you need to invest. You need to participate in the two main pathways, which is make money through your job or accumulate money by providing value. And then number two, literally participate in capitalism, which is the allocation of capital. You don't get a choice. If you do not fucking allocate your capital, you will be left behind because that is the structure of the society that we exist in. The capitalism is not evil. It is a mechanism of making sure that the people who need the money get it so that they can improve society for everybody else. This is the reason why fucking socialism doesn't work, because it misallocates capital. So you don't have a choice. You have to learn investing. It's not a question of like, oh, well, maybe I'll just out earn everybody my whole life. Like, no. What books do you recommend to read about the markets? Are you fucking kidding me? Fuck off. The Intelligent Investor is a shit book, you stupid ass. Fuck you, man. Like, what right do you have to say The Intelligent Investor is a good book? Let me summarize The Intelligent Investor for everybody watching in literally one sentence. Have a wide margin of safety and dollar cost average. Oh my God, amazing. Like, I can't believe that knowledge. Oh, fucking Charlie Munger is so good. Bro. You don't think I know this shit? There's a reason why. Thinking Fast and Slow and Intro Stats are the only two books that I recommend. I teach you everything else. And there's no way that I could possibly go into as much depth with psychology and have you listen to it as much as Daniel Kahneman can in his book Thinking Fast and Slow. And you do need to know that. You do need to read that, because every investing decision that you make comes from the brain. And if you don't understand what the brain is doing, then what chance do you hold of success? Zero. You all with your egos and your fucking caveman brains, you think you're all in full control of your decision-making capabilities. You see a bottle on the table and you pick up the bottle and you say, I am in control of my brain. You're not in control. You've got no control over your brain. This is the reason why systemization is the key. You know nothing. You have no control whatsoever. I can just repeat myself forever. GM, a smaller cap coin's considered high beta and higher caps. No, well, smaller cap coins are considered higher beta. Oh, you missed out the comma. And higher caps high. No, that's a misinterpretation. Small caps are considered high beta. High caps are considered lower beta. Alpha is unrelated. And alpha is an uncorrelated performance metric. So it's got nothing to do. Yes. Will you post a selfie with a duck when BTC hits 100K? You fucking bet I will. Mate, I will, absolutely. Hey, geez, I'm going through the masterclass lesson. Some of the stuff he covers makes no sense. No sense to you. In the supply and demand lesson, he explains the supply and demand models. How does it... Yes, just keep pushing through the lessons, man. Everything will make sense eventually. It's like a giant spider's web of information, I know. Good to see you, Investing Master. Excellent to see you. Pepe's at the Federal Reserve. Oh, it's beautiful. Never underestimate the power of a duck. I'm continuing through the masterclass exam. How frequent should we now and in the future update the correlations of performance ratios? Correlations, I do the correlations maybe once or twice a week. Performance ratios, that's completely up to you, but probably once a month or something maybe. I wanted your thoughts on how you've gained a skill of seeing correlation patterns so fucking fast. How's it Yeah, it's just, mate, I've been doing this for years. Do you want or not to spend time with the material and understand it? I've been doing this for fucking years, man. Like, it's coming up on a decade now that I've been doing this. So if you're curious enough, if deep within your brain you say to yourself, somebody out there knows something. If somebody can sell their BTC before me and make a profit off my ass at the cycle peak, then why couldn't I know that? And what do I need to find in order to be that person? Let that fucking seed sit in your mind and grow into a luscious, powerful foundation that you can, of curiosity, that you can grow your systems and your obsession for finance from. Somebody out there is going to take advantage of you if you're not the one accumulating this information. You think I show up every day just because this is my job to serve Tate and his mission? Yes, but I would do this the same way that I'm doing it for you guys every day, regardless of if I was here or not. All you're seeing is the fucking front-facing public version of what I already do for myself. Of course, what I show you on these live streams is only a fraction of what I do, because I can't dox all of my fucking signals and holdings and all of my other stuff. But yeah. As more people learn about the global liquidity cycles, I believe you said there could be a possibility that all of the available liquidity data will be priced in, and that yes, the lead is narrowing, and the data that comes out would be lagging one day. Let's hope that doesn't happen. Well, you don't need to hope. It's an assurance. But even if most market participants knew about the relationship between crypto and liquidity, don't you think that over the long term, that would be impossible, highly unlikely to be front run? No, of course it's going to be front run. To my understanding, during liquidity upcycles, people buy risk assets like crypto because they have more money. Then people sell more, not really because they have more money. It's more of the displacement of risk that is in the grids lesson. If you go to the grids lesson and go to page number 2, there is an explanation on how liquidity displaces risk through asset markets, kind of like a Newtonian cradle or a boat in an ocean, depending on which metaphor you find most appealing. Yeah. So it's not just because they have more money. It's really a risk. It's really a money displacement effect. Yeah. Is it really possible for global liquidity to be number 2 metric instead of the number 1 in the future? No, it'll always be number 1. It'll always be number 1. It will just be harder to extract alpha from crypto using liquidity. Because liquidity is also the driver of foreign exchange markets, like relative purchasing power, balance of trade, central bank policy. These are all like openly, publicly available metrics that determine the balance of power in Forex markets. But you could never use them to make money from the Forex markets because it's too complicated. And they're front run to such a high degree. It's like that Reddit post where they're like, imagine all the people on Earth and all the babies that they could ever have and all of their preferences and their jobs and how many hours they will work and in what countries. All of that information has been priced in. Every possible data point that you could imagine has already been priced in. Well, that's what the Forex market is like. Now, the cryptocurrency market isn't quite there yet because it lacks their liquidity. This is asset liquidity, not monetary liquidity. It lacks the asset liquidity for large players to interact with the market and to discount all of the alpha and the data that they have. Whereas the Forex market is an example of a highly asset liquid market where large players can interact with that market and they can do whatever they want over any time horizon because of the insane levels of liquidity that they have to play with. So you will see the amount of competition in the cryptocurrency market gradually increase over time until it gets to the point where it's kind of like the stock market indices. stock market indices at this point in history are quite difficult to forecast or to trend trade, because they're also discounting a lot of probabilities about macroeconomics and monetary policy as well, but they're more liquid than cryptocurrencies. So you will often find that the stock market will be a little bit harder to manage and to trade than crypto, but crypto will eventually get to that point too. And then whatever fucking asset comes after cryptocurrency, whatever that is, and whatever small caps are in cryptocurrency, there will always be a place for people to compete against each other. It's just a matter of time. And it's just the cycle of life. So get used to the fact that there is no one secret. There is no one type of fucking method that always works. There is no asset that will always work for everybody all the time. The secret was always adaptation and constant hard work. God has been very kind to you all and to everybody that's ever existed on this planet. The entropy that causes these asset markets to decay for their alpha to decay to a point where you can't compete. And for every asset class and all the different opportunities that you can get access to, the rate of decay of this entropy and the difficulty that you get over time is actually slow enough so that if you work hard, you can get ahead of it. But you need to work hard. Otherwise, you're going to fall behind. And that gap can be nice and wide as long as you're always working hard. There is a gap there for humans to work hard consistently over the course of a very long period of time and learn skills, learn investing techniques so that you can stay ahead of the decay in the alpha in these asset classes. But it's like you going to the gym and looking at the biggest guy there and being like, oh, I can never be the biggest guy in the gym. If only I could just cheat somehow and get either to his size or I don't know, like you could take steroids and a whole bunch of growth hormone, right? And you could get huge in a matter of time. But there's a cost associated with that, which is that you fuck up your entire hormone system and then you're fucking cucked for the rest of your life because you can't produce any testosterone. Whereas the big bodybuilder dude, who's like an old motherfucker, maybe he's been training his whole life. Maybe he's been dedicated forever and he has sustainable gains. But you wanted the cheat way out and you didn't have the discipline or the fucking vision. That's the same thing like the markets. If you do the work, God is generous to you and you can get ahead of the entropy. That's what Andrew Tate has said. And you know what? Everything that Andrew Tate says is true and it can be applied to so many different parts of life. And the investing market is absolutely no different. Because I know that he said that shit and basically I'm just repeating it, but with a different spin. GM Professor, as I'm thinking of expanding my SDCA system in the dashboard of CryptoQuant you gave us, should we take all of them as fundamental indicators? Yeah, some are technical. No, yeah, some are technical. Nope. Yeah. Nope, haven't seen that. You're welcome. You're welcome. Yep. You're welcome. You're welcome. 50-50, mate. Just go 50-50. If you don't know how much of each to hold, just go 50-50. I read each chapter. I only read Thinking Fast and Slow once. However, every chapter that I read, I stopped and did a point-to-point breakdown of everything that I learned in that chapter. And then I did a text review of that chapter and did a summary of what I had learned in that chapter. And I also read there was a sister book or like it was like a related book that was made by Daniel Kahneman's partner. I forget what it was called. It's basically the same book, Thinking Fast and Slow, but it's like slightly more complex. And I think it's not Misbehavior of Markets. I can't remember what it is, but it was good, but I didn't quite enjoy it as much as Thinking Fast and Slow. There's a reason why Thinking Fast and Slow is the best. But yeah, So I read through Thinking Fast and Slow very slowly, very intentionally, and did not blast through it at all. Like, analyzed deeply the book, like when I went through it, like step by step. I read, stop, complete review of that chapter, deep, then moved on. What do you think with replacing ETH with salt? Do it if you want to. You know the fucking method. Don't ask me if you can do it. Just fucking do it if that's what you fucking want. But always be aware of the relative trade-offs and everything. Congratulations on passing the masterclass. Coinbase saying that Solana flips Ethereum in DeFi trading. Yeah, it just means that there's more speculative. People are probably trying to increase their activity on Solana to get the Jupiter airdrop. I mean, if there is a Jupiter airdrop. If you were to give a beginner advice, what would that advice be? Do all the fucking lessons. Literally everything that I could want to teach a beginner is in the fucking lessons. Sorry to be so brutal with you, man, but it's a very basic question. How would I find sentiment information? Well, others. Just look at others. Others deed, more like it. All the sentiment information you need about the altcoin market should be found in others. Others D. A gold seasonality chart. Mate, yes, thank you back. Yeah. You're by far my favorite crypto professor. Thank you very much. Yes, there is a Jupiter airdrop. Just got the notice on my wallet. Good. Cool. Good for you. I noticed that little pause on... yeah, well, I like Jupiter. Jupiter's a great DEX, man. When I'm on Solana, I only use Jupiter. It's badass. I actually really like it. It works just like 1inch on Ethereum, which I've always loved. I've always loved 1inch, but Jupiter is like instantaneous, like, and fucking fast. What are your reviews for BitGet? I don't give a fuck about BitGet. I mean, I don't care, man. I don't know. You mentioned we will see BTC go to 300K. Can you see this? You mentioned we will see BTC go to 300K. Can you see this being possible? If I was the one that said it, does that mean that I think that it's possible? The fuck type of logic is that? Hey, Adam, I know you said this. Does that mean what you said it meant? Anyway, fuck this. Thank you very much, guys, for tuning into Investing Analysis. I've had enough. I'm going to leave you to it now. Please show up tomorrow for tomorrow's Investing Analysis. I love you all. Make sure that you get your masterclass lessons done, and please help out all the new students that we have coming into our campus. Make sure you take this activity seriously, because the more obsessed you are with it, the more money you'll make, because obsession is reflected in your bank balance, or portfolio balance, I should say, if my life is anything to model yours off. So love you all. Peace out. Stay safe out there, and I'll talk to you very soon.